The Treasury Department released new tax withholding tables Thursday, reflecting changes stemming from the Tax Cuts and Jobs Act passed by Republicans in December of last year. Changes the administration hopes employers will implement by February 15th. Treasury Secretary Steve Mnuchin touted the reforms Thursday.
This is just the first step in a three-step process. Next, the IRS will be releasing a new withholding calculator that will be available on irs.gov by the end of February. This will help provide individuals with certainty so that they are neither over-withheld or under-withheld and can plan their financial decisions.
Peter Morici is an economist and a business professor at the University of Maryland, and he joins me now. So, Peter, Treasury Secretary Steven Mnuchin said those new tables will be in place by next month. What do you think will be the biggest changes for most taxpayers?
Well, 90% of American taxpayers will have more net pay in their paycheck. Their withholding tax will go down, so they'll feel a little bit better off.
Well, lawmakers in high-tax states are looking for ways, though, to circumvent the newly imposed cap on the popular state and local tax deductions, which have allowed residents to save billions on their federal tax bills. Secretary Mnuchin called those states' efforts ridiculous on Thursday. Can you tell us more about the so-called SALT deductions and how states could try to bypass that cap?
Well, it's going to be very difficult for the states to bypass the cap beyond 2018. They did facilitate some taxpayers paying their property taxes early, but you had to have your taxes actually assessed. It's really going to be very, very difficult to turn property taxes and state and local income taxes beyond that into some kind of federal tax deduction. And about 10% of the population, because of eliminating that tax deduction and the fact that the rates are not going down terribly much for them, will see a tax increase. What's more, they're going to get a lollapalooza. They're really going to see that tax increase when they file in 2019 for their 2018 taxes.
Yeah, I mean, so some Democrats are warning that these new tables point to an effort to increase people's paychecks in 2018 ahead of the midterm elections, which could leave some taxpayers owing more in 2019. So explain to us what you make of that argument. Well,
for most people, the argument is false. They're going to get more money in their paycheck because their taxes are indeed going to be lower. About 80% of the population faces lower taxes. Less than 10% of the population theoretically faces higher taxes. And unless they go in and decide to have, by filling out a form at the payroll office, you know, every company has someplace where you can do additional taxes withheld. Unless they have some additional tax withheld, for example, if you're a family on Long Island with a $20,000 a year property tax, unless they take some more tax withheld, they will likely see their taxes go up and from what they paid in the past, and they will end up owing money in 2019.
All right, Peter Morici. Peter, thanks very much.
Take care.